What is up, guys? In today's video, we're going to talk about how to invest in stocks for companies that are socially responsible. So, what we're going to look for in this video is something called the impact investing, or companies that are having a positive impact on the planet, on our livelihood. And I'm a big believer in that because I believe as time progresses, companies that are innovative, that care about the environment and humans, they are the ones that are going to win in the long run, even if in the short run they're going to go through struggles. Just because it is so important to understand the demographics, the situations that we're going through, environmental issues or healthcare related issues or technology issues. So doing that, looking at that, let's talk about the one that I am looking at right now, and I'm kind of excited about this one. So the company that I will discuss today is called Smith and Nephew PLC. So SNN is their symbol, and just a little about the company. It's a global medical technology company. So medtech is huge, just so you know that. They've managed to convert 75% of their waste to energy with targets to increase this number, and they contribute more than 1% of their adjusted pre-tax profits for educational grants and scholarships. Okay, that's very impressive. Key initiatives, their global revenues, working to expand healthcare access and equipment to underserved populations by creating equipment that can be used by general surgeons, and creating global partnerships. Open an expert connect center in UK to training surgeons from nurses from the UK, Japan, Canada, China. Now here's the important part, their UN Sustainable Development Goals. So these are some of their key initiatives that they've taken, and the Sustainable Development Goals that they are focused on, so we can read right here that Smith and Nephew meets the following UN Sustainable Development Goals, which are good health and well-being and responsible consumption and production. So this is great. One of the things I am really passionate about is medical technologies and healthcare and med tech, and companies that are using waste to produce better items, better products. Just like in the last video we discussed Loop, today we're discussing Smith and Nephew. So let's take a look at the fundamentals of this company and even the technicals, and why I believe that this is a great opportunity for anyone to invest in. So we're here at the chart of SNN, okay? But first, let's take a look at their fundamentals. They're based out of UK. They're a developer of products for orthopedics, endoscopic, and wound management markets. Their market capitalization is 16.3 billion, which is very big. Looking down, they have very little debt, about 31%, and their return on equity is 19%. So their fundamentals are pretty good. I personally like these fundamentals. Now looking at their weekly chart right here, we see that it hit a low around here of 33.79, and this was on February 9th, 2018. And since it's been basing in that area, but now it's finally starting to break out. I personally believe that it's a great buy at this point, and you can put your stop at around 33.74, or you can wait and buy it at around 37.65, right? So how would I personally trade this? Since the markets are kind of closed right now, what I'm going to do is I'm going to go ahead and I'm going to go to Robinhood. Okay, let's just see if we can turn it on. And I'm going to go to SNN. And I'm going to put in a order to buy. Okay, so this is overnight. Let's just say I'll buy 1 share. And you can put in a market order or however you want. So you can purchase this. So what I wanted to talk about now is that this is what I look for in a company, that everything needs to connect, everything needs to make sense for it before it starts to grow. And The company needs to give value to the world, the company needs to have strong fundamentals, and the company's technicals need to support those fundamentals, so we kind of get a good idea of risk reward. Now, looking at this, you may not risk a lot. Maybe you're going to risk about $4 a share. So if you have $1,000 account, you can buy maybe 3 shares, in my opinion, right? I just don't invest too much money in any one stock because we're building a long-term portfolio, right? But companies like these are great addition because they grow over time. They have a return on equity of 19%. So I hope that this video helps you, kind of shows you where my mind is when I'm investing in companies like these, what I'm looking for, and how you can benefit from these companies and feel good about investing in the stock market. All right, guys, I hope that this video helps you. Please like, subscribe. If you have any questions about this company, any thoughts on any stocks you want me to look at, let us know. This is Azam with Investify. Have a great day. Goodbye.